What's going on, guys? Ants Trades back with another video. Have a decent amount to talk about today. I want to go through SPY, the price action on SPY, AMC, and APE. I want to give a quick refresher on my theory, which is 100% valid still. Um, Nothing has changed. We're still in a very good spot, and I'm going to show you why I think we are, and I'm also going to explain why I still think we're squeezing. My TA is still valid. My theory is still valid. And I think we are on the verge of seeing AMC squeeze to new highs. And I'm going to go over everything one more time heading into a long weekend. I'll leave you guys with this. So, with that being said, let's jump into SPY. Again, 2-year long descending broadening wedge, downtrend from the absolute low here. We've been doing nothing but forming higher highs and higher lows all the way up to the breakout point. We broke out of a 2-year long downtrend on SPY and then have seen continued upside. Jumping really quick into the daily. This is what we have. I mentioned all week, I think since Monday, I mentioned that SPY was going to be playing this pattern out, this symmetrical triangle here, by Friday, and that I would not be surprised to see a head fake. So, with that being said, from the breakout point that you have here, you saw a run up to local highs of 418, and as I've mentioned all week, we've been ping-ponging in between support and resistance on the 416, 410, and 406 level. You have your bull trend here, your descending resistance line here, and just ping-ponging back and forth between support and resistance. Started to run out of space here in this pattern, in this symmetrical triangle. Yesterday, saw a pretty nasty gap down, reclaimed the bull trend, traded sideways most of the day, and then end of the day, you saw a pretty nasty sell-off that brought us all the way back down to 408. After hours, you saw some more dumping into pre-market this morning, where you gap down even further, open at 407, and then see even more downside all the way down to 404, where you find a bounce, and then somehow manage to close the day green. Overall, I still think it looks great. I'm still bullish here. I mentioned all week that I would not be surprised to see a head fake out of this pattern. I mentioned that I felt the market makers were making this look bull trappy, and that I would not be surprised for this pattern to play out and we see a head fake to the downside before we continue the run to the upside. With that being said, slightly higher volume today. Looking at the EMAs, the 50 EMA has now crossed the 200 EMA. Here is your golden cross on SPY. Usually you're going to see a move a few days after you actually get the cross. This is very bullish to see on SPY. I mentioned that yesterday. And yeah, I mean, overall, end of day yesterday into today was very, very ugly for SPY. You saw a huge sell-off, huge gaps down. Even with this, AMC held up relatively strong both days, as did APE. AMC is looking very strong right now. We're going to get into that in a little bit. Really quickly, jumping into the 1 hour, just to look at this on a smaller time frame. Here's the pattern that I mentioned, your bull trend and then your upper resistance, and we've just been bouncing back and forth in this range until the end of day yesterday, where you break to the downside of it and continue downward and gap down even further today. SPY spent most of the day trading in this range here between 404 and 406, bouncing, and it looks like it carved a very nice bottom here, and then towards the end of the day you see a push back up to reclaim support on 406 and close the day 407 and some change. Overall, I think it looks really good. I was expecting this move, this head fake to the downside. I mentioned it all week, and I am not going to be surprised to see SPY start ripping to the upside next week. So overall, I still think it looks really good. Really haven't seen a pullback here on SPY in a while. I mean, we were due for one to begin with, and getting one here, I'm not surprised to see, as I mentioned, that this was a possibility from the beginning. So overall, still bullish here. I don't think SPY is even close to done with its run. I know some people are going to tell me that I'm stupid for saying this, but I think SPY probably for the rest of the year is going to be running to the upside and see a double top around 580, and I wouldn't be surprised to see new highs. As crazy as that sounds, I would not be surprised to see SPY rip to new highs during this year into the following year. So with that being said, that's pretty much it for SPY. It still looks great. I'm still bullish here, and I was expecting that pullback. I mentioned it all week. Jumping really quickly into AMC now. I just want to start back from the beginning and give everyone a refresher on my theory and explain why we're in a very, very good spot right now. Things look very, very good for us right now still. So yeah, really quickly, just jumping back to IPO, and I mentioned this in my theory video. I'm going to mention it again really quick. IPOing roughly January 14, 3 years later, January 17, 100% move from IPO, $11 to $22, 100% move, 3-year bull cycle on AMC, followed by a 3-year bear cycle on AMC, January 17 to January 2020, repeating bear flag over and over again, so nothing but downside here, until you get to January 2020, where you get a cycle reset, and then, this is around the time the CDC announces COVID. Wall Street thinks they're slick and tries to drive AMC out of business. AMC already wasn't, really performing too well prior to the COVID outbreak, and then, with the lockdowns and everything, Wall Street thought maybe it would be a good idea to short AMC to the grave, and retail catches on. They start buying the stock, holding the stock, and never selling it, and have done nothing but buy and hold this entire time, which you could see clearly on OBV. Nobody is selling, and they're digging themselves into a deeper grave here. Keep in mind that this play and the situation here has never been seen in the stock market, where you have retail obsessed, absolutely obsessed with the stock, and just buying it and holding it and buying it and holding it and buying it and holding it through all of this of huge unrealized losses, and just buying and holding more, averaging down, and just buying and holding. I mean, they're trapped. We have them cornered. That's why the community is as toxic as it is. There's shills everywhere. Anybody that is, on YouTube and promoting AMC from a bullish stance, they are attacked. And that's what we deal with. We deal with a very toxic community because we're infiltrated by paid bashers, paid shills, by Wall Street to rattle us, shake us up, and spread FUD and lead us in the wrong direction because we have them cornered, we have them trapped. So with that being said, January 2020, you got a cycle reset. Wall Street makes the worst trade of all time. Retail catches on. And then you have this pattern here that plays out leading up to the January squeeze. From January, you trade another symmetrical triangle here, break out again, squeeze again, and then from there, we have seen nothing but downside in... One sec. We have seen nothing but downside in a descending wedge, which is a bullish reversal pattern that we have recently broken to the upside and have come down to test and held the descending resistance here. Very strong resistance here that we've just got knocked off time and time again. We broke out of it, came back to test, and held it as support, and saw a 15% bounce off of the wedge. It looks very good. So, again, 3-year bull cycle, 3-year bear cycle, cycle reset here in January 2020, 3-year bull cycle again, January 2020 to January 2023. Bull cycle, we're still up on the cycle here, and we are about to get a cycle reset, January 2023 to January 2026, where we are. Now, this actual pattern, when the algo really kicked in and started running this thing on a loop, was February 20th. February 20th, 2020 marks the start of this cycle here. I mentioned that it doesn't have to be 3 years to the day, but it's around 3 years. It's somewhere in that range. February is the month after January. It's right there. It's 3 years. February 20th, 2023 is next week. And, just from a stance of where we're sitting right now, looking to get a cycle reset, it looks like we're going to get a bullish cycle here because we broke out of a 2-year downtrend to the upside and held as support and bounced off of it. It looks like we're about to get another bullish cycle here. And that bullish cycle, in my opinion, is going to start off with a squeeze to new highs. Now, really quickly again, I just want to mention this because, maybe some people forgot, But this cycle, the one that started back here, this pattern that played out back here, that started in February 20th and of 2020, this three fractal segment here has played out perfectly here from the breakdown in the flag in November. I've run through this about 3,000 times by now. The only difference here is that this is a descending wedge, so the price action that we've seen has been descending. So it's still the same pattern. It played out the exact same way the whole entire time. Even up to now, you could still probably argue that as you come up and retrace here, you could just argue that you come up and retrace here with some fluff in the middle. You weren't going to just break right through the wedge. We got rejected off of it here, retraced for 2 weeks, and then you get the move up. You could probably argue that from here to here is the same move that you get here to here, and then you come down to retrace as we do here, and then we saw a 15% bounce up, which you could probably argue is this candle here, and this is what we're looking at next. Now, I did mention it was going to be hard for me to predict what happens once we broke out. We followed these three fractals for a year and a half. From this flag breakdown to now is approximately a year and a half. We followed this perfectly. I mentioned that when we broke the wedge, it was going to be hard for me to determine price action. It would be hard to predict price action from there. And once I got a better visual on what was going on here, a better view, I saw the candles, I saw the dailies, the smaller time frames, the 4 hour, the 1 hour. It looked a lot more similar. We followed this perfectly while we were in the wedge. But once we broke out of the wedge, the pattern that we got when we broke out, it looks very similar to me to the May breakout right here in this May pattern where you break it here and then you come back to, retest. We didn't come all the way back down to the pattern. I mentioned this was an exaggerated move here. You didn't come all the way down here. Here we did. I mentioned that this was exaggerated, but it's still the same pattern that leads up to the run in June. Now, having said that, keep in mind again, this is a 2-year-long downtrend on AMC. A 2-year-long descending wedge, point to point, respected perfectly the entire time. Couple wicks below there, touch points here, touch point there, 10 days here, touch point there, retrace, hovering right under the wedge here before you break out of it. Come down to touch the wedge again, and we held support perfectly here, and then bounced off 15%. Yes, I'm retarded for charting with linear, even though my chart is perfect and has been respected perfectly the entire time. It looks really good still. There's nothing to be concerned with here at all. Really quickly jumping into the daily. From the halt where you come down and then you test the wedge. We tested the wedge here perfectly, bounced off both days here. This was Friday, and then Monday this week, we wicked perfectly to the top of our descending resistance line and bounced off of it. I think it was on this Monday, the video that I made, I mentioned that I wouldn't be surprised to see a wick into the wedge, but I did not want to close in it. I said it would not be the worst thing in the world to wick slightly into the wedge, but closing in it, I would not like to see. What happens the next day? We wick into the wedge and we close right above it. And the following day, we see 15% in the green, bounced right off of the wedge. Perfect bounce there. It looks really good. Now looking at the daily after that 15% bounce, yesterday we saw a doji on slightly lower volume than the day before. Obviously, you're not going to get this type of volume on a doji. Range bound all day. Pretty much closed the day where you opened it. A perfect doji here. I mentioned today that we could probably expect another sideways day. Even with SPY dumping the way it did, which, if you told me that SPY was gonna drop from Thursday end of day or Thursday midday from 413 to 404 from Thursday midday until end of day today, I would have said, yeah, AMC is probably going to come back down to the top of the wedge here. If I knew that in advance. SPY drops 413 to 404. AMC trades flat. Actually, we're forming higher highs here, higher lows. And at first glance, this move looks kind of toppy. It does. And if you look on the daily, it looks toppy. If you look on the 1 hour, it looks toppy. I'm going to get into why I don't think that this is a top here and we're coming back down. But, you got some lower volume today, decreasing volume here, 2 dojis. It looks indecisive. But I'm going to show you where I think we are in our fractal, in our May breakout pattern, the retest that you get before you squeeze. Overall, it looks really good. One more thing I want to show, and I'm going to do this before I get into the smaller time frames, is, where is it? Ah, I could have swore I just, that's not it. All right, I'll just do it now. It's approximately right there. Okay. So this is our protection line. We get to feel nice and safe on this line here. This is the halt that you saw on December 1st, right off of the descending wedge here. You get rejected off of it on a halt, come back down all the way to the bottom. You spend 10 days trading here, come up again. We got halted on this day too, I believe, where you touch the wedge again, you get rejected off again, retrace, rejected, breakout, gap up, and then it looked like we might have started running here, and then we got halted for our protection again here. Came all the way back down to retest, held the top of the wedge as support, saw a 15% green the next day, followed by a doji, and then today was another relatively sideways day, forming higher high and a higher low. And I mentioned this yesterday as well, this protection line for our safety gets lower every single day. Right now, the top of this line is sitting around 670, and it's decreasing daily. So we really do not need to see a lot of upside here before we get into very volatile territory for AMC, which can trigger a squeeze, which I'm expecting to trigger a squeeze. We really do not need a lot of room here. We closed today at 524. You're talking about a $1.50. You need $1.50 in the green to get up back up to this range here where we've seen halts. The previous two halts that we've seen, we don't need a lot of green here to get up into this territory. And in my opinion, and again, I'm not a financial advisor. Nothing I ever say is financial advice. But in my opinion, if we get back up into this range here, this $6.70, $7 range, and break through it, we are squeezing to new highs. So with that being said, let me just remove this really quick. Get rid of that. And I'll get rid of this. And really quickly, I want to jump into a split screen here. Let me remove this blue so it matches up a little bit better. Okay. I have to throw a bunch of stuff on now. I already have this set up. And I want to show you guys where I think we are. And I'm not going to be giving dates, but you can look at what I'm showing you. I'm going to paint a picture for you. I'm not going to give dates. And you can, do what you want to do with the information I'm about to show. So I've said a million times that we followed the pre-January squeeze, the three fractals perfectly up until the point where, oh, there it is, protection line. I feel safe. Nice. All right. So I mentioned that we followed the three fractals perfectly up until we broke out of the wedge. I mentioned that I would not be able to predict with 100% accuracy the price movement once we broke out of the wedge, and I was pretty off at first, and it makes sense because I was following January, and to me, at this point, this looks very similar to what happened in May, right before you squeezed, and you got your all-time highs in June. So right here on the left is your May breakout, right before you see all-time highs in June. This is what you get in June. You just keep ripping up all the way to new highs. This is May on the left, and then present day on the right. So when May breaks out of its pattern, out of the symmetrical triangle here, you see a gap, and then you come all the way up to a point, just the same way we do here. The movement is not 100% the same, but it's very similar, where you break out, retest, get some more upside, and then you gap, and then you come up to this range here, where you have this ascending resistance line here, and then you just keep coming up and hitting it, reject it up, hit it again, hit it again, hit it again. Same over here. You hit it here, you hit it here, you keep coming down, hit it, come down again, come all the way back up to it, hit it again, right? Same exact thing. Now in May, after you hit it the fifth time, you gap down, and after you hit it the fifth time here in where we currently are, instead of gapping down, we have a bear flag that's repeated over and over and over and over again, all the way until you got back to the bottom of the wedge. Now, this gap down, and you didn't come to test the breakout point. I mentioned that this was an exaggerated move here, and we came all the way back down to test the breakout point. It's still the same move. This one is just, you didn't come down as far, you didn't retrace as far here. This one was exaggerated. You got a repeating bear flag. Algo drawing this thing out, just burning calls, doing what it does. But the pattern is still the same. Ascending resistance here and here. Touch points on it, 5 touch points there, 5 there. And then you get a bear flag here all the way to the bottom. Here you just gap down, and then you get this where you have a descending resistance line, and you hit it 4 times here, kind of like a W. There's your first, your second. Oh, sorry. Here's your first. You have a wick to it. Your second, your third time hitting it, your fourth time hitting it. You're forming lower highs on this and lower lows. Besides this one wick here, same thing over here. 1, 2, 3, 4, forming lower highs and lower lows. Now, the fourth time that you hit it in May, you break through it and you get a 15 or roughly 16% move to the upside. This was the bounce that we saw on Wednesday, where we wicked slightly below the wedge here, which I mentioned was a possibility to begin with, and we held it, really formed support here, and then you saw a 15% bounce. Here I have it on 20 because I have it stretched all the way down. You saw a big move on both of these that broke through this descending resistance line here, broke the descending resistance line here. You get a huge move to the upside. Let me just get these off now. And then these 2 boxes here is the pattern that we are in now. This is the 30-minute for both, and I had there was a lot of stuff on the chart, but before I had a date range here from gap to where we are now in this pattern. Over here it was 12 days, and then from gap to the end of this pattern where we are currently, it was about 16 days. I believe that this May pattern here was about 1.25 times as fast as this, roughly the same thing. But where we are today, and at first glance, this looks very toppy here. It looks like this thing is looking to come back down. But if you look at what happened over here, it was the same thing where you come up to a point and then you retrace here, and you keep getting rejected off of a resistance here, same as we do here. And from the top, you have you come down. And this is the lowest that you see over here, just the same way over here. You come down here, the lowest point that you get here, this low wick here. And from there you bounce up over here, and then you're just trading sideways here. And there's a resistance here that you just really can't seem to get through. Just the same way as it is over here. This wick is a little bit higher. This was the the opening candle on the day. Usually the most volatile point in the day is the opening candle, so you can expect to see a wick there. But we got rejected pretty hard off of 550 here, and then came all the way back down to 530. Spent most of the day trading in 530, trying to break through 540, and then we kept getting knocked off of it. Just the same way over here. It looks like, from the high here, it looks like you can't really break that high. You just keep getting knocked off on all these wicks. 850 range here. Looks like every time we tried to break through 850 here, just kept getting knocked off. You find your low point here just the same way we do over here, and then you're just trying to break through 850 and you just can't seem to do it. You get wicks above it slightly, you get knocked back down, same thing, knocked back down, same exact thing that we have over here. And then the end of the day candle closes here at 524, and it's pretty much in line sideways here with most of the price action that you saw in this range, which is the same thing that you have over here, right at the midpoint of the price action. Yes, this looks toppy. If I didn't know what I was looking at, right? If I was looking at a stock and someone showed me a 1-hour chart on a stock and I was looking at this, I would be like, okay, yeah, this thing is going to come back down for sure. But knowing where we are, I'm not going to give dates, but you could see what I'm saying. And this is the June run. Now, I'm not expecting it to follow the June run, perfectly. I'm expecting my price targets have not changed. My price target range is still um it's still 120 to 150 range depending on how this goes. Um how we're going to squeeze, couldn't tell you. Probably going to see some crazy gaps pre-market, after hours, huge candles, like boom boom candles during the day, and then big runs pre-market, after hours, get a huge gap up, something like that. And my price targets have not changed. I'm still looking at the 120 to 150 range for the top of this move, and that is pretty much it. One more thing I wanted to mention, and I'll jump back into the full chart for this. Let me just pull all of this stuff off first. A lot of clutter there. I'm not giving dates. I will say that I'm expecting upside next week. We closed at 524 today. I do not expect to see anything lower than 524 next week. I will say that. I'm not giving dates, and that's all I'm going to say on that. Just 1 second. I'm not, listen, and I'm not saying that it's impossible to come back down to the bottom of the wedge here and form carve this out a little bit more so you get more of like a W type move here before you go. I'm not saying that's impossible. I'm just saying I don't think it's likely, and I believe the bottom is in here and that we're about to see upside next week. One more thing I wanted to mention. From a technical standpoint, you get rejected off of a 2-year downtrend here, retrace, break it, see some more upside, and then you come all the way back down to test the breakout, test the descending resistance line. This was resistance for 2 years. We broke out of it a few weeks ago, came back to test it as support, held it as support, and then saw a bounce off of it. From a technical standpoint, it looks like we're about to see more upside. I think we're going to see a squeeze to new highs. One thing I wanted to mention really quick, jumping to the daily, is that today was OPEX, and $2.2 trillion worth of options expired today. Taking a look at the past here, and I know OPEX is every week, but really quickly I just want to show you something. Looking at OPEX in January 15th, 2021 was the OPEX date. So jumping back to the chart here, January 15th, right here, January 15th, 2021. What followed after that was a pretty crazy move, a short squeeze here. OPEX was today, February 17th, 2023, $2.2 trillion worth of options expired today. There's so much stuff lining up for us, between the 3-year cycles, the bars pattern, OPEX, breaking a 2-year long downtrend, breaking out of it, and then coming back down to test the breakout as the previous resistance as support, holding as support, and then bouncing off 20%. It just looks so good. The timing of the reverse split, we're I think 17 trading days away from the reverse split. There's a lot of stuff lining up for us, guys. I'm bullish as fuck here. I still think we're squeezing, and I think we're going to new highs. I think we're going to see triple digits. I'm not giving dates. I still think that we're going to see all-time highs before the split. I think Adam Aaron did that strategically. I don't care what anyone says. The people that talk shit about Adam Aaron, this guy is on our side. It's his company. He's paid in stock for the most part. This guy's on our side. Why would he want to see his company, the share price of his company doing bad? It doesn't make any sense. It does not make any sense at all. So that's pretty much it. Everything is looking good. Everything's in our favor. 3-year cycle, bars pattern, breakout, retest, bounce off of it. OPEX, where we are, what I just showed you on the micro from the breakout pattern in May, and what it looks like over here is the same exact thing. I'm not giving dates, but I will say that I am expecting upside in AMC next week. I'm expecting upside in SPY too. I think SPY looked like it carved a pretty nice bottom around like 404. Had a strong push to the end of the day. I'm expecting upside on SPY. Golden Cross just happened today. I don't give a fuck what the news is saying, all what the Fed talks and all that shit. I really don't give a fuck. The chart is telling me bullish. I'm bullish there. Jumping really quickly into ape. Not even going to go crazy into this. Ape, I mentioned earlier this week that this week was going to be pretty boring, and for the most part it was. It was pretty low volume sideways. Ape legitimately traded sideways the entire week in what, a 20-cent range here. Sideways the whole week. Lowest volume today than we've seen in a while here since January 26th. Today was the lowest volume day since January 26th. Still just hanging in there sideways here. It looks good. I'm expecting upside next week, guys. In AMC, in Ape, and in SPY, I'm expecting upside next week. Everything still looks bullish to me, and that is pretty much it. So, with all that being said, I hope everybody enjoys their 3-day weekend, and I will catch you guys next week.